IGCSE Accounting. Solve past papers with explanation. Commerce Lecture Online. Topic: Final Accounts of Manufacturing Business. Paper code 045222 MJ16. Yasmin Manufacturing Account. We are discussing paper code 0452 May-June 2016. You are watching Commerce Lecture Online. Yasmin opened a garment factory on 1st May 2015. She provided the following information. May 2015, cost of factory machinery, which is a non-current asset, is given. Cost of office fixture, furniture, equipment is given. Cost of tools, these all are the non-current assets by her, and she opened a new business. So on the first day, these are the non-current assets. For the year ended 30th April 2016, revenue is given 1,13,640. Purchases of raw material amount, carriage on raw material amount, purchases of finished goods amount, wages and salaries given to factory operatives, that is the direct labor, is 32,300. To factory supervisor, that is the indirect labor which is to be taken in FOH, factory overhead, is 11,860. Office and sales staff, which should be taken in the expenses of income statement, are these. General expenses factory are 3340 and office are 1960. Factory expenses will be taken to the FOH in manufacturing account. Office expenses will be taken to the income statement expenses portion. Rates or rents are 6,000. On 30th April, the inventory of raw material, work in progress and finished goods are all these. Because this is the year end, so these three are the year end or the ending inventories to be used by us. Focus on the word opened a garment factory. It means there will not be any opening inventory of all these three for Miss Yasmin. Value of tools at the year end are 830. The cost of tools at the beginning of the year and value of tools at the end of year will help you to calculate depreciation expense for tools. This depreciation expense will be calculated by finding the difference. We'll minus 830 from 1000 to find the depreciation of tools to be taken in manufacturing account. Additional information given in the question are: rates are apportioned 3/4 to factory and 1/4 to office. Out of the amount of rates, which are 6,000, we'll multiply it with 3/4 and we'll take that to factory overhead portion, and 1/4 remaining will go to the income statement expenses portion. Additional non-current assets were purchased during the year. No additional non-current assets were purchased during the year. This will help you to calculate the depreciation for loose tools. Factory machinery depreciation is to be calculated 20% per annum on cost. We'll use this method. For the factory machinery depreciation, it will be taken to FOH. Office furniture and equipment to be depreciated 15% per annum. Loose tools are revalued, as I told you. Requirement are manufacturing account for the year ended 30th April. And we have more requirements of cost of sales and gross profit percentage, etc. Let's move to the first requirement of manufacturing account. Manufacturing account involves four main portions. Again, the direct expenses are not given in the question, so we'll focus on the raw material consumed and direct wages while calculating prime cost. Raw material consumed will not have any raw material opening inventory because Yasmin just started the business as stated in the question. Purchases of raw material included with carriage inward, we'll add these two. This is the amount. We'll subtract closing inventory of raw material, and this is how we'll calculate raw material consumed. In this answer, direct wages of the factory operatives, which is also known as direct labor, will be added. These two will give us the final amount of prime cost. For calculating manufacturing account, we have to add factory overheads total to this amount of prime cost. Let's make a list of factory overhead in the internal column. Factory supervisors' wages, which are known as indirect wages, will be taken here. General factory expenses, which are given to us in the question. Rates, as we had discussed earlier, will come here. Depreciation machinery, on the cost we have to calculate 20%, will come here. Only the expenses which are related to production or factory will be taken in this portion. Office expenses are ignored while calculating this portion because they are to be taken in the income statement. Depreciation loose tools will be calculated by revaluation method. The total of all FOH, that is factory overhead, is written here. We'll add the total of factory overhead to prime cost and we'll finally get our cost of production. In this cost of production, if we have any work in progress opening, that is to be added, and if we have work in progress ending, that is to be subtracted. Because she has opened a new business, therefore there is no work in progress opening given in the question. We'll only subtract work in progress ending and we will find cost of goods completed for Yasmin. Our first requirement is done. Let's look at the second requirement, which is cost of sales portion. Cost of sales portion is calculated by cost of production plus purchases of finished goods. Because there is no opening inventory of finished goods, therefore it will not be taken. Otherwise, we can take the finished goods opening inventory here to finally calculate the total amount for this calculation. Closing inventory of finished goods is to be subtracted from this answer. These two are added. We got this answer. Closing inventory subtracted and we got cost of sales for Yasmin. Requirement B part 1 is done. Part 2. Calculate the gross profit for the year ended 30th April. We know that revenue minus cost of sales gave us gross profit. The revenues were given to us in the question. The revenues given in the question were, they had given us the revenues $113,640. This is the revenue given to us. We'll take this amount and we will subtract our cost of sales from this. So revenue subtracted cost of sales gave us the gross profit. After this, we'll move to the requirement C. Calculation for gross profit percentage to revenue. This is the formula for calculating gross profit percentage to revenue. Gross profit divided by revenue multiplied by 100. The gross profit calculated by us here 21,540 divided by revenue 113,640 multiplied by 100 will give us the percentage. This is how requirement C1 is done. Requirement C2. Suggest two ways in which Yasmin could increase the percentage of gross profit to revenue. Many reasons are included. You can write any two of these. Increase selling price, increase markup, reduce cost of manufacturing, purchase cheaper raw material, reduce factory wages or reduce factory overhead, or any other way in which she can increase the percentage of gross profit to revenue. Like, share, subscribe, Commerce Lecture Online.